Welcome to Global Money Talk, brought to you by Sampro TV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blaire, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thanks for joining me.
Good morning, great to be here.
Well,
it's actually National Nut Day today. Now that's the one that you eat and not the folks who are not quite playing with a full deck. And then for the birthdays today, it's Christopher Lloyd, who we all know as Back to the Future's Doc Brown, and Jeff Goldblum, who was played Ian Malcolm, the scientist in all the Jurassic Park universe. So happy birthday to those guys.
Well, it is indeed a very eventful day in terms of what's happening in the markets, and as you mentioned, the birthdays, and I'm glad you clarified that part about the nuts, because lots of protein in nuts, but we're talking about what we eat and not the type that might be walking around.
That's right, that's right.
As we kick off today's trading session, let's take a look at the major equity averages we are seeing right across the board this morning for the Dow, Nasdaq, and S&P 500. The Dow Industrial is off by over 100 points, or about a quarter of a percentage point, and the Nasdaq is nearly flat on the session, but it is trading below the flat line this morning. Meanwhile, the S&P 500 is also lower by over a quarter of a percentage point this morning. Now, Tai, we did get a slew of earnings, and that is driving some of the price action this morning. But in terms of the slew of earnings reports that came out, what stands out to you this morning?
Well, aside from the individual earnings, and there are several that were probably worth going over, I think the overall theme is, if you can beat on earnings, and sometimes you might be able to beat on revenue. What they really want is the market seems to really be focused on what is your forward guidance.
Yes.
Is your guidance for next year better than the market expected? And it seems like they're penalizing people who aren't. But a trove of earnings. GM came out and they had a good report. They beat on earnings, they beat on revenue, they beat on guidance. Even though their CFO did say that, that 19% share buyback that we had, that was a bit of a tailwind, I'll say. But the market didn't penalize them for that. The deliveries are down, but sales are up. And even though they're still losing billions of dollars in EVs, they're going to improve on that. So the market has treated them kindly. I think the last time we looked, we had just had that chart up there. They were up a couple of percent on the day. So a very nice day certainly a very nice day for GM. You can see that they've continued. They rallied on the open, and then have held those gains. Some of the other ones that Verizon, one of the big I guess communications companies, met expectations. They did add net subscribers, but the markets were really sort of unimpressed, and they opened much lower, and I think they were sort of flat on the day. If they stay that way, and this is just a chart of the day, so you can't see it, but it'd be a pretty bad-looking chart if they were down on the day, because they opened so much lower. I think they must have. It looks like they might have opened, close to, excuse me, 7% lower or so. 3M, which it's had an amazing year, up almost 50%. And then they beat the unbelievably in the last earnings quarter, and they gapped higher. Today they beat on earnings and they beat on revenue, but they're down a bit so far today. I think it was just too much expectation and maybe a little inflated in terms of valuation. And then finally, what we talked about earlier, GE Aerospace, which has had a great year, had a beat. Pretty upbeat overall, but forward guidance was just on par, and they're being punished right now. So the market seems to be a little moody, actually. And you mentioned that yesterday when we were talking. You said the markets are down on the day, and I thought sometimes they're down in the morning and they'll rally in the afternoon. We actually didn't see that. What we saw was actually a pretty terrific bond rout yesterday. Not so much in the 2-year, but certainly in the 10-year, where I actually talked to a money trader that I've known very well, and he said there's a lot of Japanese selling, sort of stop losses, maybe due to the fact that the yen is retreating back past 150, but nevertheless, a lot of selling out of Japanese names, and also we had a wave of Fed speakers who came out and said, we just want it to be slow. Lori Logan of Texas, Jeff Schmidt of Kansas City, Kashkari of Minneapolis. Although I would say that San Francisco's Mary Daly says, well, we like to keep cutting, but San Francisco's always a dovish seat, so it's sort of to be expected. And what's interesting for me is now you're really painting the picture of what happened in the last meeting. I remember when the market was really thinking 25 basis points until Timiraeus' article comes out, and really, Jay Powell said, I want 50. I want to, this is a good time, I can get 50, I want 50. And he sort of cajoled and pleaded, and he got his 50. But now it seems like the rest of the FOMC are saying, well, you got your 50, and but we're not so sure about the next one. The market has less than 2 cuts priced in for the rest of the year. It looks like most people think that they'll cut in November, but December's a lot less certain, and it's going to be sort of data driven. So that's the picture that you're getting, that Powell really wanted to get. He thought rates were too high. He was worried about the employment, and give me 50 basis points. Give it to me. They gave it to him, but now the next sale is going to be a little bit harder.
Well, you brought up a lot of important points there, and when we're looking at the earnings reports, the key names that you mentioned, we are seeing it move the markets. And when we're looking at the Dow laggards, for example, Verizon is down 4%, 3M is down 2%. 3M actually rang the opening bell in the previous session, so they were here. But when we're looking at expectations for the Federal Reserve, as you mentioned, the September rate decision, that's where we saw that 50 basis point rate cut. That was an outside move, but there were expectations heading into that meeting, and the countdown is on not just to the election on November 5th, but also the rate decision that's coming out that week of the election on November 7th. And the expectations have been pared back, as you mentioned, so we'll keep an eye on what the Fed speakers say, but also that jobs figure that will be coming out on November 1st.
We get PCE, but as you say, the most important thing is that jobs figure. And I think it's going to be, sort of polluted from the strikes and from the 2 hurricanes. So this one is, I think it'll be if it's a strong number, I think the market could react somewhat poorly. If it's a weakish number, the market will be heartened, but they'll say, you know what? Maybe it was, just due to external impacts of these, exogenous events. So I think if we get a strong number on November 1st, the market, the bond market won't like it, the stock market won't like it, and maybe gold won't even like it. But gold seems unstoppable. And I should mention that silver had a great day yesterday, and looks like it's breaking out. And when trading at on 34, I think over 34, we're at areas in silver where we haven't seen in a long time. And when you have that, you just don't know where it's going to stop. Silver can really, you can lose sleep having big silver positions. That's why when I was trading it, I much preferred to have a reasonable sized gold position, because I knew if it went wrong, I wouldn't absolutely lose my shirt. Because silver can, take it back as quickly as it gives it to you.
Well, Tai, I think this might be a great time to hear a little bit more about silver. So we've talked about gold. We've dedicated an entire market insight segment to gold. What moves gold, technicals, fundamentals, as well as central bank holdings of gold. But what's different when it comes to silver?
So silver, they dig a lot more silver out of the ground. It's probably close to 1 billion ounces. But there are actually very few silver mines. You don't actually have a silver mine. It's usually a byproduct of something else, of zinc or copper, and that's why sometimes copper and silver can be closely linked. So it's a byproduct. Now, certainly, if silver eventually gets up to much higher valuations, $50 an ounce, which was the record in 2011, or perhaps even higher, then people might actually have silver mines. But building a mine is a really big lift. I mean, you're talking about 5 to 7 years and a lot of work. So I don't think anybody's opening any silver mines yet. It's a very volatile, because there are fewer people in it. It's more sort of more traders and speculators than really sort of investors. And part of it also is, if you wanted to, you want a store of value that if you're really afraid that you can take with you when the revolution comes, you can carry a lot of gold. Silver is really kind of bulky and heavy. So yeah, how many silver bars are you going to run with, right?
Yeah.
You've got two, and you're not going to run, 1,000-ounce bars. You're not going to run very far. But it is, it's there's a lot of opportunity in it, but you're going to lose a little sleep if you have a big silver position. You'll really have to think about that. But I think on a breakout, you might say, I might have to add a little bit to my somewhat modest longs there. And the fundamental picture is very good in terms of silver and solar panels, silver and different things in sort of the green economy. The outlook for silver is generally quite positive. The question is, people have been talking about that for probably the better part of at least 5 years. When is it going to happen? Is it happening now?
And if you think about a typical Costco shopping cart, you can probably fit more gold than silver in a shopping cart if they have not sold out. So.
That's right. That's right. They never got the platinum bars back in, but for trading purposes, I still use the ETF. But listen, if you want to hold the gold in your hands, best place to get it is Costco.
Well, Tai, gold price is something that we will continue to monitor as the week goes on. But I do want to take a look at the latest cover for The Economist.
Yes.
So it is entitled The Envy of the World. And when we look at the U.S. equity markets, the U.S. economy, even compared to the other G7 nations, the U.S. is doing pretty well here.
It is. So let's take a look at graphic one. And I have to say, I cringed a little bit when I saw that. It's sort of like the envy of the world, and the dollars are up thing. It's sort of on fire. And all I can say, the Chinese, it's like, is this the kiss of death, right? Is it the same as the Sports Illustrated? If you appear on the cover of Sports Illustrated or on Madden or something. So this just made me just cringe a little bit. It's like sort of karmic. Are we asking for something? But so let's move to graphic 2, and I kind of summarized. It was a number of pretty good articles, I have to say. And forgive the sort of the small print. You can always go back and watch it again and pause it and look at it. Let me talk a little bit about The Economist. It's a magazine that's been around since 1843, and I have a personal history with it. I really loved it as a teenager. There were big supporters of Thatcher and Reagan. You can tell where I really come from. In general, they support. And then eventually they sort of moved away from that, got a little more socially conscious, and today I guess that they support general global economic freedom, but also social liberalism. And I suppose the magazine is really sort of like the ruling class magazine. For the people who say, go to Davos, this is in a way their magazine. But moving back to where you mentioned the American economy is bigger than better than ever, they had some really pretty good statistics. In 1990, the U.S. was 40% of all of the G7 GDP. Now, it's 50%. It's half of all of the G7. In terms of output per worker, the U.S. is 30% higher than Europe on average, 60% higher than Japan, and 67% higher than China, which is really interesting. And then for a nice factoid, they said the poorest state in the union is Mississippi. And Mississippi citizens earn more on average than the average Briton, Canadian, or German, which is pretty interesting. Now, the success factors that they brought up, they said, big country, lots of energy, shale, been a big driver of growth in the last 20 years. We have huge markets, but one of the things that, and I always come back to what Ken Fisher says, capitalism finds a way. Light touch regulation. There's not a lot of regulation. You can, start a business. Businesses close. The biggest, the 5 biggest companies here, now are totally different than what they were 20 years ago. Where in Germany, they're basically still the same names. And part of that is, we don't really, the government here doesn't choose winners and losers. They let the market choose winners and losers, and the economists felt that that's really, really important. They also said, and they're generally sort of open borders people, that the private sector has benefited from a lot of new immigrants, bringing new ideas and a lot of investment. One factoid that that shocked me was Amazon, on an annual basis, spends more on research and development than the entire country of the United Kingdom. That's a lot.
That is significant.
That's a lot. And finally, with the United Kingdom again, we are the reserve currency, which means we can really run deficits like nobody else can. I mean, Prime Minister Liz Truss's government tried to run a big deficit, and her government fell as a result of it. And then finally, the demographics in this country, in part due to significant immigration, is pretty flat, and will look like we'll still be 4% of the world's population in 2100, where China will drop to 6% from 18%. So if we look at graphic 3, and they talk about also the threats to how the U.S. is the envy of the world. A lot of it comes from bad politics, and I do think they're right there in terms of the deficit spending, sort of the Paul Ryans of the world, the people who want to actually say, we want to run a balanced budget. They're gone. They're nowhere to be found. And I don't think they'll be back until we have really sort of an accident, a failed auction or something of that effect. But whether Trump, Biden, or Harris, I think they're going to spend a lot of money. They like to. Trump's nativism, is an issue, right? I mean, you do want. I think you want to control your border, but you do want talented people to want to come in, right, from all different countries. Ms. Harris' antitrust stance, could be an issue where we have some of our biggest companies that grow tremendously. Do we really want to, get in their way? And then finally, I would say that there's been a lot of talk about inequality in the U.S. And the Gini coefficient. I don't really agree with that. The U.S. is, certainly at a higher inequality than some of the other countries, but you could say that a lot of that inequality is due to the fact that you can get very, very rich here, and that helps the country incentivize people to take risks. For people like Google or Snapchat or WhatsApp or whatever it might be, you don't want to clamp down on that sort of incentivization. And finally, the economists did say that if you want to bet against the U.S. in the next century, we'll take the other side. So, as much as I sometimes don't necessarily agree with them, I thought it was actually a very well-balanced article. I think if you're not a regular subscriber to The Economist, it might be worthwhile to pick up a copy and read about it. They made some really good points and summarized it in a way that you could really understand without your eyes glazing over.
Yeah, and even the online edition of The Economist features this, and the part that you mentioned about inequality, because we think about other G7 countries compared to the U.S. And when it comes to innovation, we know that there's a lot of innovation that happens in the U.S. And although you mentioned the brain drain based on immigration here in the U.S., that is something to consider, because we were talking about this when we were highlighting Elon Musk yesterday, right? Comparing his income when we're talking about how much his net worth is compared to $1 million. And when we got to that, it just goes to show you what you can do in the U.S. versus perhaps somewhere else in the world. Right.
If you look at the top, 5 richest guys right now, I think at least 4 of them, it's Ellison, it's Musk, it's Bezos, it's Zuckerberg. And so I did the math. Remember you asked me how much it would be worth? I'm like, there are too many zeros. I'm going to mess this up. And there's so many numbers. My HP 12C even can't do it, so I did it on a spreadsheet. So for Musk to give away $1 million and he's worth $250 billion, that's like somebody who's worth $1 million giving away $4. So he can, for what he believes in, he can keep, $1 million every day from here to the election. It's walking around money for him, and like I said, people are talking about it. People are saying, "Is it legal?" And it's hard to say. What are you going to tell these people? It's illegal, and you're going to take their money back? I think it would be a pretty hard thing to do.
Yeah, I think that is a very good problem to have. If you can't fit your net worth into an HP financial calculator, because that tells you have so much that the decimal point won't extend to where you need to go to. But when we're talking about inequality, the net worth of someone like Bezos or even Musk, Mark Zuckerberg, or Ellison, that speaks to the potential. If you do take risks in this country, you're able to come up with innovations that nobody has thought of, and you're able to create industries around that, then that really speaks to the reward you get for the risks that you take.
I was just talking very recently about someone who said they were they knew someone who was a musician, who was a good musician, didn't make a lot of money, but he's set for life because years and years and years ago, he bought a chunk of Starbucks. Somebody said buy Starbucks, and he never touched it. Been there for 25, 30 years, kind of forgot about it, which is the reason why he still holds it. And now he can do music, for the joy of it, for the self-actualization of it, and because he's got this Starbucks stock. So in a way, inequality sells, right? Thomas Piketty, famous researcher, said, "Oh, it's so terrible, the inequality." There is inequality, but I think you do want inequality because that says, you can really, really do unbelievably well here. And the Economist made a point. They said that since about 1990, the top quintile has gone up in sort of income 70%, and it's the same as the bottom quintile. If you take out the very richest, the bottom 20% has done better in terms of their growth than really the top 19%, which is good. It's healthy, and it's healthy that the richest people now were not the richest people 20, 30 years ago. It was the Walton clan, right? The Walton clan listen, they're not starving, but it's not the same people, and you want that churn because it says that this economy is dynamic, and that comes from the market choosing, not the government choosing, which one of the things that we keep talking about, China wants to pick winners and losers. It's not really a good way to do it.
And that example of holding Starbucks, buying it, say, 20 years ago, even 15 years ago, and forgetting about it, if you think about how far the stock of Starbucks has come in terms of price and also market cap, that is considerable.
Yeah.
And if you think about the U.S. stock market, just in 2024 alone, the S&P 500 is up over 20%, the Dow up over 10% year to date. That is considerable.
It is, and it says, if you want innovation, you want potential, where do you invest your money? And we're 25% of the world's GDP, and the stock market valuation, it's 60% of the world's value in stocks. And that statistic says this is why this country is such a great place to invest, because there is that those animal spirits. It's, I've got a great idea. Let's start something in my garage. Let's drop out of Harvard.
Absolutely.
That was Bill Gates, and a generation later, Zuckerberg.
Yeah, absolutely. And I'm sure as someone who has attended that institution, you've met many great minds, but to actually drop out of Harvard and create a business based on risk, right? And also reward.
And it's the thinking that you don't really have to follow that path, and I'm nowhere as brilliant anywhere near those guys, right? But it's we can always. This is a piece of paper, a sorting mechanism. But I have this great idea, and if I wait till I get my degree, that idea, that time may have passed me by. So forget that. Let's go do this. There's a lot of different possibilities, and all the CEOs and the leaders, they don't all come from just a handful of institutions, except maybe the Supreme Court. They all come from Harvard and Yale Law School, except Judge Barrett, who comes from Notre Dame. But otherwise, it's sort of wide open here.
Yeah, and even when we look at other economies around the globe, we know a lot of people migrate to the U.S. to launch their ideas versus staying in their nation of origin.
And that's something we should really focus on. I mean, today my wife is in the hiring business, and they find that if they want to get somebody over, get them an H-1B visa, it costs at least $30,000, and it's difficult. So we should actually balance that and make it easier for the really smart, talented people who want to come to this country. Let's make it a little easier for them, and we can do that and control the border.
And in an election year, we know that is a key topic when it comes to immigration, and also when we're thinking about innovation and talent as well. So, Tai, as always, thank you so much for joining me here at the New York Stock
Great
Exchange.
to be here.
Tomorrow is Wednesday, and we have Boeing coming up.
Oh, we
so
do.
That'll be very exciting. Thank you so much, Tai. And coming up, I will be joined by Pete Pachal, founder of the Media Copilot. We'll be right back. Don't go away. Welcome back to Global Money Talk, live from the New York Stock Exchange. Journalism is essential for the data used to develop Gen AI systems. News does make up half of the top sites in Google's training data for large language models and almost half of top sites in a content database. Even content behind paywalls has been unintentionally included in LLM responses. Joining me this morning here at the New York Stock Exchange is Pete Pachal, founder and CEO of the Media Copilot. Pete, thank you so much for joining me.
My pleasure, Remy. Thanks for having me.
Well, first and foremost, when we think about the market in 2024, there's been a lot of focus on the top AI names, in particular the Mag 7 companies. But when it comes to the business of technology and, of course, the news business, that's an area that you're very familiar with as well. So how did we get here at this intersection of technology and journalism?
Well, it's a long story, so that predates AI and the current iteration of it for sure. So for the longest time, tech and journalism have had kind of a love-hate relationship. There's been a tension there, I think most people would admit, particularly over the 2010s, where search and social became the primary way people online would find information. And so there was this thing that developed with, okay, these big distribution platforms, Google, Facebook, Twitter, they were basically, the media companies had to essentially create kind of a relationship with them, while at the same time watching them eat their lunch and sort of take the advertising dollars, at least a large number of them. But it became sort of a reality that you had to do that. Within that, there was a de facto bargain between Google in particular that you can scrape our content, you can index it, and you will give us traffic. You're going to give us our audience and open us up to the world. AI changes that equation fundamentally, because what AI does, there are many, many use cases for AI, but for online information, one of the primary ones is summarization. So it's going to take information, big long articles, a bunch of articles, all on the same topic, to basically process them, think about them in the way AI does, and give you a summary. Very useful tool. There's no clicks. Very rarely do people click through from a summary. It's like, oh, you got my information, we're done. So it's using the old technology of the scraping and the indexing, but using it in this novel way at scale that has a lot of media companies and the media industry itself sort of up in arms and sort of thinking about this existential crisis now. Like, oh wow, what do we do? So what do they do, right? So the big thing that's happened is there's been a lot of legal saber rattling, and there's been some lawsuits and cease and desist letters, a lot of them even in the last month or so. Just yesterday, News Corporation announced they were suing Perplexity. Now that's just one of many lawsuits in this area. But what has broadly happened is that the AI companies that are doing this have by and large realized, okay, there needs to be some mechanism, some economy, some way content creators can still do what they do. They feel incentivized to do what they do, and still have these great AI products. So OpenAI has begun making a lot of deals. You've probably read about them. The New York Times, oh sorry, not the New York Times, the News Corp. The New York Times is actually suing them. We can talk about that in a minute. But Axel Springer, Dotdash Meredith, a lot of these big media publishers have deals with OpenAI. Perplexity is one of these companies, and they do something very different. So they don't license content, which is what OpenAI is doing. Perplexity instead has decided, okay, we're going to give you a piece of the pie, which is to say we have an advertising business model that's just getting going. If you make a deal with us or essentially become part of this program, we will share some of that revenue with you. So it's like you go to Perplexity, you ask for a summary of some current news, an ad is served to that person. Oh, if you're a publisher who contributed to that answer, essentially, you get some of the revenue that's generated from that. That is not as popular, I think, among the publishers. They see sort of licensing as the thing that will get them somewhere faster. I think probably because the money involved is decent. You know, it's not going to completely save media and journalism, but we're talking tens of millions of dollars for a big company. News Corporation, I think, again, this is reported, I don't think it's been confirmed, but it's even more than that. It's potentially in the hundreds of millions of dollars. It seems very credible, the sources reporting that. So So this is decent money if you're a media company. So are you going to essentially take that licensing revenue, which may continue into the future? We're not sure, but it may. Or do you want to get in sort of the ground level of something like a Perplexity? Because right now, Perplexity, in terms of how people get information online, it's nascent, right? Google's the big thing. 90-something% of all sort of search is Google, and you got a little bit of Bing, and I don't know, maybe a little bit of is Jarvis still a thing? I don't know. But there's a few other players. Perplexity is like probably a fraction, 1% or something like that. But if you think about it, what if Perplexity does challenge Google? Perplexity, people who use it love it. Google's responded with its own search, like AI-powered search. If people end up doing this a lot, which is to say getting summaries of information, Perplexity gets popular, that chunk of ad revenue might end up being more than licensing revenue. So there's a lot of things to sort of think about here as a media company, like should you sue? Should you make a deal? Who should you make a deal with? What should you support? But the bottom line is people need information. Journalists and reporters and media companies tend to give good information. There is a value to it that is really being thought about in a novel way in this AI era, and it's really exciting to watch because it's a whole new economy that's kind of emerging.
Yeah, and I think it's befitting that we're here at the New York Stock Exchange, because when we're thinking about the tech sector as well as even the news business, the media business, it is about the bottom line at the end of the day. And when we think about how media has changed over the course of the last decade or even 2 decades, the way that we consume information has changed with the advent of smartphones and the ability to access information at a moment's notice. And this wasn't the case, say, 20 years ago, when we would still subscribe to, say, a News Weekly magazine or the newspaper and actually read the hard copy or actually sit down in front of the TV to watch news. And now we know the business model is different. But when it comes to the role of journalists and reporters, I know this is a subject that is close to your heart, and we know that when it comes to Gen AI, they're good at summarizing information for sure, but what if somebody needs to interview a person, a defendant, for example, or actually interact and get information that, let's just say, artificial intelligence isn't capable of interpreting? Where's the value of the human in this whole equation?
Right. The role of AI in the act of journalism is, again, this is super hot topic and very controversial. Like, this is why I think media has a certain amount of difficulty covering AI to some extent, because they have a stake in how it plays out. Because AI, it's funny, like, not a new observation, but AI is coming for knowledge workers more than sort of the service sector and stuff. No one saw that coming. So what can AI do for a media company and for journalists individually, and how is that going to change just how people get information and what journalism even looks like? So a bunch of publications have experimented with like AI written articles, and most of those experiments have not gone well. Typically it is something goes wrong, they get something wrong, and it's very embarrassing, and they sort of dial back what they're doing. What isn't reported hardly ever is the stuff that goes right. So there are publications that are using AI written articles. Some of them have been publicized, some of them haven't. And this is actually not a new idea. Even before ChatGPT, when AI was more about data lakes and big tech operations, publications like the AP, like Bloomberg, they would essentially turn things like earning reports and sports scores into articles in an automatic way. So Gen AI has essentially sort of democratized that. It's made it the cost of doing that much, much lower. Of course, it's introduced a lot of variables, because the nature of generative content is that it's a little unpredictable. Sometimes it's going to throw you something that you didn't think. So the thing is, obviously, doing it at scale or any kind of systemic way, you need to have what's called human in the loop. There needs to be human oversight of the AI, at least in the current sort of generation of AI. So because this is kind of like the most obvious use case for AI, hey, just get it to write some stuff for you. I don't think this use case is ever going away. And we're even seeing now, ESPN in particular is one of the latest because it was actually widely publicized. They're starting to use AI to write stories for things like basically undercovered sports, like something like lacrosse. And so far, so good. It's only been like about a month or month and a half since they started doing it. But I think what they've done, they've learned from the mistakes that were made mostly in 2023 from various publications. I won't name them, you can Google them. But the idea of using AI to write articles, I think, is going to always be something that is secondary to what the sort of, what journalism is, what journalists will be doing, the humans. And I think might be a little controversial. I think this might be a bit healthy for journalism, right? So I was the tech editor of Mashable for the 2010s. For many, many years, I oversaw a search social strategy and a big online publication. Aggregation is often a big part of that strategy. What's aggregation? Aggregation, someone reported something, I write my version of it, give a link, I move on to the next thing. It's up until recently, that's all been human driven. You hire, junior level people, some interns generally. I'm not above it either. When I was editor there, I certainly did my share of aggregation, and that ends up being a big part of your product. Well, now that sort of very basic kind of form of journalism, that can be done by robots, And I think for people getting into the business and working in the business, this, again, I'm not saying 100%, but it can be very healthy, because what it is like, well, as a human, as a person with judgment, as a person building trust among sources and getting good information, the meat of journalism, focus on that. Do those things. Zero in on really big, meaty stories, and then for the stuff that you have to do around it, which is more aggregation, let a robot do that. And someone who's more specialized in checking the robot's work and kind of maybe be the human in the loop there. That seems to me the sort of a proper way to think about it. And what this does, it doesn't just sort of free up a journalist to do real journalism. I think organizationally, if you have a team of humans doing that, so if you're the newsroom, if you're the media company, what that's going to do is, I think, help with your focus. Like, this is going to be part of the trend, and in part fueling it, in part because of it, of don't go broad and an inch deep, go narrow and deeper. There's much more value in that as a media company. You see it in a lot of, and this is the same trend that's AI driven, but the trend of, for example, Business Insider was Insider for a long time, but they started as Business Insider, so they've sort of come back around from trying that big scale play of being everything to everyone, and have doubled down on their original brand. And you're kind of seeing this in a lot of different ways all over media, that going small, going niche, going deep on topics is going to, you're going to have a smaller audience, but that audience is going to be more engaged, it's going to be more informed, and frankly, as the AI era continues, you will have more to offer these AI engines. Because when someone does have a query about that space, they're going to want to hear from a domain expert, not just whatever USA Today aggregated. No offense to USA Today, I know they have great journalists, but you know what I mean. It's sort of like generic product of content as opposed to someone who's really deep into it. So again, I know this might be a little controversial. AI is healthy for journalism. I don't necessarily think it's entirely healthy for the media industry, at least in the short term. An obvious consequence of everything I've just been saying, everyone's going to get leaner. It's just the reality. And I think this is true with AI across industries, frankly. You kind of look at what you can automate, that part of your business gets more AI driven, you give the humans hopefully better jobs and you get better at them, but the business itself might be not have as many bodies, at least now. As we get good at that, I'm sure there'll be room for growth.
Yeah, I think you highlight a lot of key points there. And of course, when it comes to the journalism industry, this is a topic that is controversial. When we think about the use case or application of artificial intelligence when it comes to financial services industry, whether we're talking about chatbots or let's say an equity research analyst or an analyst being able to free up their time by not having to scour through an earnings report or any update, and they're able to concentrate, say, on forecasting or something that they want to focus on, that is less controversial. But we know the reason why when it comes to journalists and journalism, this might be a touchy subject here. So I do want to expand on this and take a look at publishers as well as platforms. So you mentioned what's happening with Dow Jones, New York Post, and some of these organizations, but what do you think will come out of all of this?
You know, it's a really good question. I think what we're going to have is a new economy for information vis-a-vis AI. And I don't think there's going to be one solution. I actually think there's going to be licensing, there's going to be things like rev shares. Broadly, there will be some sort of compensation mechanism that gets built, and it will be at scale. It needs to be, because there's so many purveyors of information, so there needs to be some way that smaller companies and smaller publishers get their due. I mean, right now, OpenAI seems only interested in large publishers, and it's very interesting. So I mentioned the New York Times is suing them. There's actually a coalition of newspapers that's joined that lawsuit. So the Denver Post, the New York Daily News, there's a few others in there. And there seems to be a question there on like, well, why, with the New York Times suing them, why are you doing it? Because why wouldn't you rather just make a deal? Like, wouldn't you rather get one of these deals? And my suspicion, and then it's not just mine, most folks have speculated this, I don't think they've said, is that OpenAI might not have wanted them. They weren't big enough. So if the Denver Post isn't big enough to get the attention of an OpenAI, what hope does an even smaller publication have? So it just shows there needs to be some solution that you can scale, that's essentially self-serve. For like if you're even an independent blogger, how do you make sure your information that goes to in an AI, you're getting compensated for it? Because it seems to be that the Sophie's choice right now of like, should I just cut off the AI engines so that I don't get any distribution through AI, or I just give it to them for free, you know, and then I don't get anything. So what is your incentive? So thankfully, people see this problem. There are a number of startups actually that are trying to address this. So I'll just name a few of them. One of them is Tollbit, which essentially is creating a system by which people can, like basically if you're a publisher, you can put in a technical solution that's kind of a toll booth, you know, of like, okay, you're an AI scraper, you want this content, here's how much it costs, and here's the automated way you can do that. You know, there doesn't have to be a deal, doesn't have to be, no humans need to sign anything, but you can sort of robotically kind of like make that connection and make sure the publisher gets compensated. It's very technically easy to do, much harder to enforce, because a lot of this is kind of on the honor system. So I mentioned Tollbit, there's another one called Dapier that does something similar, probably a little further along in creating the actual marketplace. So if you're a publication, it's not just someone finds your content and then has to pay a toll, you can actually kind of advertise on the marketplace. Hey, my content's available here for this much per query, et cetera, you know, whatever the rate is. And you can sort of make that deal right there if you're an AI company. Another one is Scale Post. They actually work with Perplexity on exactly this issue. They have a lot of relationships with publishers. And there's even Fox owns a service called Verify, which again does something similar, but their whole quirk is that it's on the blockchain, because this is actually a pretty good use of blockchain technology, this distributed ledger of like, what content are you accessing, how much are you paying, and doing that in a way that's transparent to both parties. Well, what technology does that really well, you know? Like, so there's a lot of opportunity here to build this economy for everybody else, and there's just a matter of Will the AI companies play along? Again, this is my suspicion. I think they will, simply because it's much more convenient. There's a reason OpenAI isn't making deals with smaller publishers. It's like, why would you want to? Like, have these companies do it for you, make a quick deal with them, then you are both empowering your search engine and protecting yourself from further litigation. So it seems like a good idea.
Yeah, a lot of moving parts here. So I do want to shift our focus very quickly over to hardware. So how does hardware play a part in all of this, and why does it matter?
It's huge, because ultimately at the end of the day, it's about how are people getting information. And right now, I think most of us are encounters with AI is we're typing into laptops still. We're all like blah, blah, doing, just typing it like Google, right? I don't think even that many people are using these apps on phones, but they're about to, because Apple Intelligence, which has been delayed, it has not been released generally, but it is in the beta, will soon be available to everyone with not just an iPhone, the last two iPhones, it's like the 15 and the 16. So, but over time that'll happen, and that's such a huge impact. Apple has such a huge device footprint, they have such a stake in this, that I think this is going to be in a large part how people interact with AI, a lot of people who hadn't done that before. The thing about Apple though, even though their device footprint is very, very good, their AI assistant, Siri, does not have the best reputation. And that may be deserved, it may not be, but the point is, there is opportunity here for other players, right? So Apple's full solution is you're carrying your phone, you might have an Apple Watch, you might have AirPods, and so you could sort of talk to your AI that way. Amazon already has a big footprint in a lot of homes with their Echo devices. This seems like a very, very good avenue for AI as well. Here's the thing though with Amazon, where is it? Like Alexa is still pretty much the same as it's been the last few years, and they have had problems, it's been reported in Fortune and elsewhere, in getting Alexa to be as smart as ChatGPT. And there's a lot of sort of minutiae of that, and I won't go into all of it here, but one of the big hurdles for big companies with big device footprints like Apple and Amazon is AI's propensity to, again, surprise us and maybe give us something we didn't expect, something perhaps inappropriate. And you can think of, if they don't put the right guardrails on these experiences, think of all the screen caps and sort of viral videos that will inevitably result. So there's a lot of like tiptoeing in, which frankly I think in my mind is opening up a lot of opportunity for other players. We saw with OpenAI, just, they don't have a hardware footprint, but their mobile app now has advanced voice mode. So you've probably seen this, they made a big deal about it when they first unveiled it in the spring. You can literally talk to your AI, just like the movie, just like, her or whatever, and you can have conversations, and you can interrupt, and it's very personable, there's tone, there's inflection, it's just like talking to a person. That is kind of where we want to get to, this sort of her world, but it really depends on this marriage of software experience and device footprints, and to make that really work, it's very unclear who will win. One last thing I'll say about it, to really make it a true good digital twin experience, you need to share a lot of yourself with the AI. And a lot of people are not comfortable with that. Even Apple, which has a pretty good reputation when it comes to privacy, I don't know if we're all in a hurry to sort of let Siri or an intelligent version of Siri suddenly know everything about us, even though it might arguably already do because it sort of has access to our phone information. We'll see in terms of like people's comfort level with that, but I think that is a necessary barrier that needs to be broken through for people to really sort of have their minds blown with AI and just kind of use it for everything. There's like, people predicting it's the end of apps. Well, it'll be the end of apps when you completely trust it to do all the stuff that apps do for you. We're not quite there yet.
So you bring up an important point there when it comes to guardrails and privacy, especially when we're talking about organizations such as Apple trying to expand Apple Intelligence overseas, because we know in terms of regulation, different countries have different rules when it comes to artificial intelligence, and for good reason, because privacy laws differ based on countries. So whether we're talking about China or the EU versus the US, we know that the regulatory landscape for the adoption of intelligence, especially AI, is different. So when you're talking about opportunities for smaller companies, what would that look like on a global scale?
Yeah, so the great thing about data is that it doesn't care where it is, you know. So I think there are a lot of opportunities for particularly a lot of these startups to come in and sort of figure out this economy of the new information, the AI era, if you will. One of the other issues, though, I sort of glossed over it earlier, but I should give it a little more due, is that it's kind of the honor system on a lot of this stuff. And if you're talking about sort of advantages and differences in regulation, I think that becomes even harder to enforce sometimes outside of the United States. Again, not thinking specifically about any particular field of law or any particular case, but if you want to scrape a website and you want to ignore these toll booths and whatever sort of restrictions they put on, that's very, very easy, technically easy. The problem becomes is like if you want to turn that into a product that is public facing, then okay, there's legal recourse for the person who is scraped to do something about it. But if you think about a lot of these probably more private institutions, who knows how many companies or bots are out there doing this. There are ways to track bots, and some of these companies like Dapier and others. There's another company called Datadome that does a really good job of this, that works for big publishers like the New York Times, so they can know like who's scraping their content. That's easy to find that out. Harder to do something about it. So I do think there's opportunities for security and sort of like the knowledge of this. Right now I think the vast majority of sites don't have companies even sort of looking at who's scraping their content. Actually, I used to work at CoinDesk. This was a big problem for us with regard to people taking our content, whether it was articles, newsletters, what have you, cloning our sites and our experience, and essentially fooling people that this is CoinDesk and getting them to do nefarious things. So that issue is kind of exacerbated in this AI world, and I think most media companies, beyond just having a monetization strategy, need to have sort of a security strategy for around their content. What this is sort of leading to, I think, is almost like a more federated media world, where various publications might be available in some AI engines, but not others. Probably a few more paywalls or bot walls, if that's a thing. And then there's just going to be kind of like a very difficult corollary to the open web today. The open web itself might even be compromised a bit. Google, with what it's doing with AI overviews, it's doing something very similar to Perplexity. It's not doing that with news just yet, but I can't see it not doing that with news in the next couple of years. So there's going to be this whole thing where publishers may even want to cut themselves off from Google to some extent. Not everybody. Certainly you don't want your search traffic to go to zero, but as people more and more consume stuff through AI engines, and you find yourself as a publisher saying that that's my audience, let's focus there and maybe less so on sort of the open web stuff. I mean, and just basically lock everything else down. I think that might start to become more of a strategy going forward.
And 2024 is an election year, and we only have about less than 4 minutes left for today's discussion. So I think this is a great time to talk about some key terms we might hear out there when it comes to news information, the election, and of course information. So we've been hearing about deep fakes in 2024, not just in the US, but there have been several elections that we've been paying attention to around the globe. So when it comes to deep fakes as well as hallucinations in AI, how that happens and why it's so important when it comes to news, and of course content provenance. So when it comes to these three topics, what do you think is most important as a key takeaway from today's discussion?
Oh, wow. 4 minutes? Okay. The last thing you said I think is hugely important, content provenance. I think that is going to be a huge area of focus going forward. Really like to create information that's reliable. Journalists need to be empowered with some of these signals on content. So with regard to images and videos that have been deep faked or just faked, having that label on there is going to become an essential part of media training, which of course is going to become a thing that fuels that whole those standards emerging. They already have standards; they just need to be adopted, not just by the people creating the media, but also all the platforms. You really want to see some method that anyone could, when they see a photo on a social media network or just being online somewhere, they want to look for those credentials and be able to check back. And if they're not there, certainly if you're a reporter and you're thinking about covering a breaking news, there's always pressure to cover something breaking. We saw this with that fake Pentagon explosion picture, I think that was last year. You want to get it up soon. That training of not doing that, if you don't have those credentials, has to be sort of really embedded. Now, it doesn't mean things can't still spread virally, and that's kind of an issue. Again, platform enforcement needs to sort of be a thing. I think you're probably going to see that with various networks. X is always a bit of a X factor because of Elon and what he wants to do. But still, if you have Meta, if you have Snapchat, if you have others sort of on top of this and adhering and supporting these standards, I think we're going to see some progress there. Now, with the coming election, generally, I'm not sure if we've been lucky. I think it's more than just luck in terms of have deep fakes really screwed us up to the point where we don't know which way is up. No, that hasn't happened, obviously. And I think there are logical reasons for that. As fast as deepfakes can spread, debunking can spread pretty fast too. What it has done is, again, empower this liar's dividend that is talked about a lot, which is to say everybody now has AI as this extra excuse not to believe something. So I don't think there's a huge, a quick fix with regard to this. I think it's a very long-term problem in terms of society, psychology, social media, all these factors. But one thing I'll say is in the last few days leading up to the election, that's what I'm sort of reserving my sort of radar for, right? Because I think that's because these things are in such a short time frame, that's really when they would be most effective, when there isn't quite time for that debunk to go as viral. So that's, I welcome movements where basically enforcement goes up. So Google, I think has said they're not going to allow certain, I forget the context, but some political ads are being forbidden on certain major platforms in sort of that time frame, which I think is just prudent, right? You just want to make sure when it comes down to the wire that we all have our hands on these sort of manual override levers, if you know what I mean. So that seems like a positive development.
Okay, Pete. Well, thank you so much for joining me here at the New York Stock Exchange. A very insightful discussion here. I appreciate your time.
It's my pleasure, Remy. Thanks for having me.
Thank you. And that will do it for Global Money Talk Live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. You can check out the show anytime on our YouTube channel by searching Global Money Talk. Thank you so much for joining us. We'll be back tomorrow morning. Have a great day.